So task 5 gets us to look at the wages side of things. So with Pennington Limited here, they have said that they pay their employees by cheque every month and maintains a wages control account. And a summary of last month's payroll transactions are shown below. So what we have got here is our gross wages, income tax, employers and employees, NI, and then as well as that, employees and employers pension contributions. So what they want us to do here is record the journal entries needed in the general ledger for the wages expense, the HMRC liability, net wages paid to the employees, and the pension liability. So what we have got here for each one in turn, our little double entry journal. So for our first one, for our wages expense, what we must always remember here, this is the cost to the company of employing the individual. So what we must remember here, that when calculating this, that this will be made up of not just the gross wages of 18,293, but the employer's national insurance contribution and the employer's pension contributions as well. So if we added up all of those three items, the cost to the company, that will be shown as an expense in the account. So it will be, to show that an expense in the account, it will be, the expense will be as a debit of that total of those three, which is 20,675, and we will therefore credit for the same amount, of course, the wages control itself, as that's all that the control is there to do, to show where the money is going and to whom. So great. So for the second one, for part B, they wanted down here the HMRC liability. Now, what we must remember here, that with this one, this is not just going to be made up of, like before, the employer's NI and the employee's NI. The other item here that is also going to HMRC is the income tax as well, of 5192. So if we add those three up, we will get a total here of 8556. And this one, we will debit now the wages control, and that is because we want to show the liability, the amount of money that we are due to pass on to HMRC, which is a liability. So that liability will be as a credit. So great, really good, excellent. So our first two are done. For part C, they have said record the net wages to be paid to the employee. Now, with this one here, we will start with the gross wages, but we must think now, what deductions are the employee themselves making here in order to come to their net wages? So yes, the employee will have income tax deducted from their gross wages, and the employees will have employees' national insurance contribution and employees' pension contributions as well. So if we take away income tax, employees' national insurance and employees' pension contributions, this will therefore mean that the actual amount of money that the employees receive into their bank accounts are 10,919. And as we were saying, we will still debit the wages control, and that is because we want to credit the bank, and the fact that our company's cash now, as we pay these employees, will have fallen. So to reduce that asset, we credit it. So really, really good. And our final little transaction was our pension liability. So this is just the sum of our employers and employees pension contributions, which if you added them both up, we don't need to go back here, 800 plus the 400 is 1200. And as again this is a liability, it will be a liability and a credit to the pension company and a debit to the wages control. So really, really good. Excellent. So that was the first part of this task here. Now, what we are told next is that a credit customer, Marbles Limited, has ceased trading, owing Pennington the amount outstanding shown in the receivables ledger. What they want us to do, therefore, is record the journal entries needed in the general ledger to write off this debt, including the net amount and the VAT. So, first of all, what we can see up here is that we were owed originally $595 by Marbles. We invoiced them for 1276. The credit notes then against the account 650 and 525. So all that this therefore means is that the total amount owing to us are going to be 696. So, and how I've come to that is that if I balance off this T account, which the higher side again is the debit side here, which comes to 1871, well, so should therefore the credit side, and therefore I have a balance carried down for 696. So I know this is the amount that I have to write off. And will therefore, if I wish, for my receivables ledger control account, it will be that 696, that total gross amount that I will be crediting from it. That I will be removing from my receivables ledger. But what I want to show therefore is this bad debt expense, and this is where I have to separate out the bad debt and the VAT. Now I know that 696 is the gross amount, and so therefore to get back to the net amount and the VAT amount, I will have to divide that 696 by 1.2, as that is 20%. So if I do that, 696 divided by 1.2, that will therefore mean that the bad debt expense, the net expense, will be 580. And this will be a debit as it's a cost. And the remaining amount then to make this journal balance must therefore be the VAT element for the remaining 116. And this too will also be as a debit to our accounts. And that's it.